I've been saying for a long time that triple-digit silver is in the cards. All it takes is some sort of crisis and for people to be rushing back to it as a safe haven. And we will be seeing triple-digit silver. I believe that this is an absolute.
And I thought as a nice springboard, we could take this article that was updated in November. And it does sound like it's outdated. It uses old data, but it is one of the newest pieces that we have. The silver market faces a third consecutive deficit in 2023. Yes, 2023, not 2024 or even 2025, despite a 7% price increase. So it does take a long time for us to get accurate mining data from around the world, but basically 2023 was a third consecutive year of a deficit. 2024 was a fourth year, and 2025 will probably be a fifth year. So yeah, I thought it'd be useful to take a look at some
also, I want to comment that that 7% price increase. So that was back in 2023. The 2024 had a pretty spectacular price increase, actually. Gold and silver had great returns in 2024. And one of the things that I did a video on years ago is there's a big time lag between the price rising and more supply coming online. The price rises and it encourages more mining, except taking mines out of mothballs that were not productive at $15 and then with it at 25 or 30 bucks an ounce or whatever, it can take years. And so there's like a 4 to 6 year lag before that catches up. So we've only had the price starting to rise immediately. So this deficit will probably keep on going. So go ahead with what you were saying.
Yeah, basically, like the main story here was supply and demand is that demand for silver is outstripping supply, and it has been for the last 4 years, and it's probably going to continue in 2025. And when demand for anything is higher than the supply, the price has to go up. I mean, it's basic supply and demand. So you can see here this total demand line, this dotted line at the top of this chart, is actually higher than the total supply line. And by the way, this chart goes back to 2015 up to 2024 as a forecast, right? At the time they made this, 2024 was a forecast.
Whenever the next crisis is, back in the bull market of the 70s, that final blow off top, the spectacular gains that silver had was when there was monetary demand. And that net physical investment, which was actually minus 31% from the beginning of this chart to the end of it. It's minus. That thing is going to go huge. That will be by far the largest category. It'll just suddenly jump up, and the silver deficit, the supply-demand imbalance, will just explode. But the price goes up high enough to where there is a gold and silver rush, and everybody goes out to try and establish mines. But it can take 10 years to get a mine open and producing. So even with mines that are in current production, ramping up production can take 3 or 4 years. Mines that are mothballed, it depends on whether or not that mine got high graded, where when the price is low, in order to make it economically feasible to keep the mine open, they start mining the most dense veins of silver, making the silver that's still in the ground around that really dense vein not very economically feasible to mine until the prices go astronomical. And so the odds of these mothballed mines getting reopened and back into production before we have a blow off top, before we have a giant crisis and huge net physical demand, because it's monetary demand. People are worried about the dollar. They're seeing silver making spectacular gains. The fear of missing out causes more people to jump on board. The price explodes. But even with the exploding price, the supply does not react to it instantly. The video that I did it showed at least a 4-year lag, except that 4-year lag is becoming longer as we go out in time, permitting and everything. So the 4-year lag is something that seemed to apply to the 70s, 80s, 90s, and then it was getting longer in the early 2000s. But as we go forward with regulation, permitting, and everything else, it's going to be a while before we see the silver supply catch up with the demand.
So the bar chart component of this is either a surplus or a deficit, basically supply minus demand. And when demand is large, we have a deficit. There's these 4 scary red bars that are very significantly negative. 2021, 2022, 2023, 2024, and 2025 could look similar. And
right.
the white line here in the foreground is the price of silver, hovering around $30 an ounce.
And when you referred to the stockpiles, the strategic silver stockpile is pretty much gone. Governments around the world don't have enormous stockpiles of silver in their treasuries anymore like they used to. That's all been sold into the market. It's gone. It's been used. And it's in landfills now or in investment bars. And so the stockpiles that are left are investment stockpiles. So as we have this deficit, it means that industry is going to have to buy that silver from investors.
Yep, exactly. And investors are going to demand a higher and higher price in order to part with their silver.
Exactly.
So the big question now is, how high can it go? The next ratio is the gold silver ratio. And again, just like before, these are annual data points. So we're only getting one data point for each year. We're not getting the full volatility here because we know that this ratio is up over 100 at several points lately. But the only one that really shows that is back in the 1940s. And that's actually funny enough. Gold was $35 an ounce. Silver was 35 cents an ounce. So $35.35. It was exactly a 100-to-1 ratio for 2 years here, which was fairly interesting.
Yeah. And in 2020, though, it hit with the COVID crash. That's where it hit 120. It was a little over 120.
Yeah, wild. Yeah. So that's a full other grid line on this chart, significantly higher. So anything you want to say about the gold silver ratio, Mike? We could talk about this for hours, but maybe we can
this is annualized data, correct?
Yes.
And so you have to imagine that spike down at the bottom in 1980 as going. So if we had a data point for specifically January 20th, I think it was 1980, you would see a much, it would be down at, down there somewhere.
A little bit lower than it currently
is.
And
that is silver catching up with gold, by the way. So for anybody looking at this is gold's performance measured in silver, not silver's performance measured in gold. So you have to imagine it upside down if you're invested in silver. And you can see that we have a long way to go from where we are today, all the way down to that area down there, meaning that's how many times. If you flipped this upside down, you would see. So you take 90 and divide it by 20 or 15, and whatever that number is how many more ounces of gold an ounce of silver will buy someday in the future.
Yep, exactly. As this swings back down towards the bottom of the graph, that means silver is going to outperform gold by a factor of 4 or 5, possibly more.
Yeah. And the supply-demand deficit is something that's helping to guarantee that. If you take the supply-demand deficit and then you multiply that with monetary demand, some sort of crisis causing people to rush to safe haven investments, and what you end up with is fireworks. I've been saying for a long time that triple-digit silver is in the cards. All it takes is some sort of crisis and for people to be rushing back to it as a safe haven. And we will be seeing triple digit silver. I believe that this is an absolute. It's just saying that it is incredibly undervalued and has huge potential in front of it. And the reason it didn't keep up with gold is because, yes, it was in a bubble in 1980, and it fell more than gold from January of 1980. And it has become so undervalued. And then when you add that supply deficit to these factors, and then the potential of some sort of crisis and a rush to safe haven assets, that's when you realize how incredibly undervalued silver is.